Jim Cramer correctly called the flush in semis that would follow Micron earnings, with SMH, that's the semiconductor ETF, falling roughly 14% immediately thereafter. Carter Worth is concerned about the relative weakness in financials. How are options traders positioning themselves ahead of a few key earnings tomorrow? We'll discuss today on Open Interest. Hello everybody and welcome. I'm Mike Coe and this is Open Interest. If you appreciate this kind of content, please let us know by liking and subscribing. So we have a lot of important earnings releases coming up. Today I figured I would highlight the above average options activity we saw in 3 of the names that are going to be reporting tomorrow before the open. The first, Taiwan Semiconductor. I mentioned this one because we have divided opinions in the space. First of all, I would like to give a shout out to Jim Cramer, who commented correctly, I should say, that semis were likely in for a very rough ride once Micron reported earnings. In fact, Micron was trading above $60 a share when he made those comments the morning of June 28th, and it fell below 52 within just a few days. That said, it's recovered much of those losses since, and now another big company is set to report tomorrow morning, Taiwan Semi. Now, yesterday I discussed that we saw some bearish options flows on fast money. Tim Seymour pointed out that he believed the valuation, which is now seeing Taiwan Semi trading probably between 13 and 14 times earnings, is actually fairly reasonable. And I'm hoping that he's right because we currently hold the name in our Smart Sentiment Event ETF. And for balance, it seemed worth mentioning that although yesterday's flows were fairly bearish, today's were merely cautious. The largest trade we saw was a 1,000 lot January 65.90 collar, likely selling those upside calls to help finance the purchase of downside puts to protect a long stock position. Now, the resulting position, long stock and with that protective collar, is actually similar to a long in-the-money 65.90 call spread. And while that's not quite as sanguine as an unprotected long equity position, it is still a bullish posture. And now the average price target for those covering the name right now is $140 a share. That's over 70% higher than the current stock price. Lone Pine, Senegon, LMR Partners, Millennium, and 2 Sigma are among those hedge funds that have recently been adding to their positions according to the most recent 13Fs, while several big mutual funds and pensions, including T. Rowe and a Japanese pension, were net sellers. The inverted yield curve, declining stock market, rising mortgage rates, and relative underperformance recently are among those reasons that some people are concerned about financials. Now, Morgan Stanley is going to be reporting tomorrow, and that one's already down nearly 24% year to date. Options markets are forecasting a move of about 5% higher or lower by the end of the week. Although analysts have been reducing their price targets, the average is still about 30% higher than the current stock price. And one reason perhaps that we saw a good-sized bullish bet today in the July 75s. Overall, Morgan Stanley traded about 3 times the average daily options volume. Again, in the interest of full disclosure, we are long Morgan Stanley in our event fund. A name we don't hold is Conagra Brands, and that one traded nearly 8 times the average daily call volume. The most active options were the July 22nd weekly 37 calls. Overall, more than 6,000 of those were purchased opening. Buyers of those are betting that it could rally through the 37 strike price by at least the premium that they spent by a week from this coming Friday. Now, sell-side analysts are rather tepid on Conagra overall, but the stock is up nearly 14% since mid-June and is actually up about 4.6% year-to-date, a rare bright spot. Now, we don't hold this one, but those that like the name highlight the fact that they are divesting from brands to improve their product focus. Recent sales of those brands include Peter Pan peanut butter and egg beaters, and they are becoming less reliant on promotions, and eliminating those less profitable products may actually improve their margins. At less than 14 times full-year earnings estimates, Conagra is trading at a discount of nearly 4 turns to the group that includes names like Kellogg, Campbell, Kraft Heinz, and McCormick. JANA Partners acquired a substantial position according to their most recent 13F. Geo added incrementally to theirs, and while Millennium and Citadel, I should say, were sellers according to their most recent 13Fs. That's all I have time for today. Please like, subscribe, and hit that notification bell to be alerted when we release new content. Thanks for watching.